Welcome, everybody. This is your host for another Saturday breakdown of this past week. This past week, profits were around, total profit was $9,276.53 minus commissions. Came out with $8,926.53. So, what we're going to do is we're going to go over all these trades one by one, and we're going to try to talk about how these losses were taken, how these trades were taken. So you can see there was no over trading. So if you look at the dates over here, this was Monday, one trade taken on Monday. There was a second trade taken on Tuesday. So both were losses now, Monday, Tuesday, 2 days, losses. Didn't overtrade. Took a loss, called it a day, came back the next day, took a loss, called it a day, came back the next day. Next day took a buy. Actually took two trades on one idea, right? Took two trades on one idea. It was extremely easy setup. We're going to talk about that here in a bit. Went in profits very well. Took a sell on gold. This sell was taken later on, and this was also a win. So two trades on Wednesday. Then Thursday came. Thursday took a sell on GPJPY. This was also very straightforward. It was talked about on the live stream as well. Played out extremely well. After that, took a sell on GPJPY on Friday when we have the guest over. His name is Jeevan. He was basically talking about how price could retest 136. So we're going to go over those ideas as well. So let's talk about the first trade we take. The first trade was taken on the 12th of October. And let's pull up this chart over here. Now, usually my plan is to trade the pre-New York, try to find trades in pre-New York, and if I find a trade in pre-New York, I'm going to execute that trade. Now, this was a holiday, the US holiday, it was also a CAD holiday, and it just so happened to be, I was looking at the charts, right? So if you look right here, this trade was taken at 137,641. So if you can see the price right over here, this is 137,641. So this trade was actually taken around like 12:30 p.m., 1 p.m., because if you look at the time, this was closed at around 20 hours and 48, right? So around like 1:48, closer to 2 p.m. So if you look at the price, right? So let's take a look right over here really quick. So this was a long trade, 137,641, somewhere right over here. Yeah, so this trade was taken right over here. The whole idea was that, okay, so once this candle is closing bullish, right over here, so this was the idea that the next candle had to continue moving bullish because trend was bullish, we were making a support, price moved up, we were creating a support at this point, right? At this point we were creating a support. So like obviously, like in my mind I was like, okay, like what, if we're creating a support, price should continue up towards 137,820. But when I took this trade and I realized that this is not the time for me to trade. This is actually not the time for me to trade. So what I did was, before this 1 hour candle closed, I exited my position at 137,625. So 137,625, when this candle was retracing, it was still ranging. There was no volume, because for price to break out of a consolidation, you need volume, right? So if you're looking at the charts at like 1 p.m., 2 p.m., there's no volume. So you're bound to take dumbass trades. So if you look, price just ranged, right? So after I exited the position, it was the $121 loss because I identified this is not going to be a good trade, right? So that was first trade. It was a loss. Monday generally took a break because of the bank holiday. And I think it was really well. It was really well because exercise discipline on Monday, and then then waited for Tuesday, and then took another trade on Tuesday. This was a buy on GJ in pre-New York. So let me pull that up here. All right. So before we talk about that trade, let's just talk about certain like the price action, or how the price was set up, that made me take a buy, right? So if you can look at the time at the bottom, this is 6:30 a.m. Eastern, right? So this is normally when I'm coming through a chart. So when I see this, I'm looking left and I'm looking to see, okay, there was a bit of a resistance created in this area. So maybe it makes sense that if this is the resistance created, price came up, created a high at 137,770, came down. At this time I was sleeping, wasn't awake at that time. So I woke up right over here when this candle closed bullish. Now, when this candle closed bullish, this told me that, hey, okay, like, you know what, if a trend is bullish from here, we're moving up. We moved up after London Open. We created a high. If we're creating a support, there's a very high probability that price can continue up to retest this high and then eventually continue on towards 137,800. So what I did was I entered a buy at this point, and the buy was entered at 137,667. So let's do this here. Long position 137,667 right over here. Entered a buy. The stop loss was kept below the 30-minute candle, and we're really anticipating price to continue up. Now, the problem here was, so obviously, you know, it ended up in like loss. So when price came down towards 137,600, I identified, hey, like, you know what, it's so when I closed before price hit stop loss. And the reason why I closed before price hit stop loss, because when it was coming down, logically I saw this as that, okay, we have a resistance up over here, right? And if I'm taking a buy down over here and I'm anticipating price to break resistance, when it hasn't break resistance, let me measure this range. So this was a 6 pip range. So for me to take like a good trade, like a 10, 12 pip trade, I need my range to be 20 pips, you know, like 25 pips, 30 pips. So this was a very small range. So this was actually limiting my trade to breed. So at that moment when this price was coming down, I was like, hey, like, you know what, it doesn't make sense to hold a position even though it was in a range. That's the reason I entered a lower lot size. I entered a 3 lot because it was in a range. My plan was to, once it broke out of this range, then I can add more risk to the trade. So whenever you're taking risky trades, you're reducing your risk all the time. You know, so took this trade, it was a loss, price fell down, and that was it. That was it. And then I didn't take any trade after that. I just took one trade, it was a loss, and I was like, okay, you know what? That's okay. Had a loss on Monday, had a loss on Tuesday. Let's go wait for a Wednesday. Now, before we go towards Wednesday, what I want to talk about is that how could I have taken the sells? You know, because whenever you're taking a loss, you always have to see that, okay, how could you have taken the correct trade? How could you have had a better bias? You know, how could you have been on the right side of the trade? So just by looking at this on a 30-minute time frame doesn't really give me any indication. So let's drop down to the 15-minute time frame at this point. And if we're looking on the 15-minute, we still don't have any confirmation. I mean, the only confirmation we do have that if we do break this support, this clean candles here to the left and price is most likely to continue down, right? So I think the only confirmation at this stage was the 15-minute candle breaking the previous low and then having a stop above the current previous candle and anticipating price to continue down to retest this low. But obviously, it was an impulse entry. Impulse entries are pretty risky. So we're going to go down to the 30-minute time frame again. And let's go back to the area where I was looking at right here. Right? I think this could have been a better opportunity during London close to take a sell. You know, because once you had this candle close, London close, candle closing bearish, this gives you a higher probability since there's a lot of volume in the market now for price to continue down, and it continued bearish and it was pretty good. So I think this mistake I'm not going to be making next week, which cost me not a lot, like $190. So till this point, I was running in a net loss for the week. Now, let's talk about the buys. So look, didn't take any trade in the Asian session, moved on to the next New York session and took 2 buys on GPJPY. I think that was one of the really good trades of this week. And let's talk about that right now. All right. So when we came to the chart, this is the 4-hour candle right here, right? 4-hour candle was forming bullish. It didn't close, you know, so drop down to the 1-hour time frame. Let's take a look on the 1-hour time frame right over here. And 1 hour was basically forming like this. So when you have this 1-hour candle closing below, let's say 136,500, it seems like it's rejecting that area and closing below to continue down. But we didn't have any selling confirmation at this time, right? We didn't have any selling confirmation. The only confirmation we had was that there was a support formed right here around the Asian session on 13th, and then price came up and it was coming back into this range. So let's take a look at the daily candle here. And let's talk about the daily candle. So daily candle, this is the daily candle that was moving up. And it was moving up from a support which was down at 135,800. So it was rejecting support. So the idea was that, okay, if the daily candle is moving up, rejecting that strong support, there's some sort of a probability that on the smaller time frames during the pre-New York, we can get price to move bullish. So let's take a look at that. So that was basically identified on the 30-minute time frame. I clearly remember this trade. This trade ran really, really, really well. So let me get those full numbers here. All right. So came to the charts around 6:30 a.m. So basically what was happening was that we had this consolidation area to the left hand side, and whenever you have a consolidation area and when price breaks through that consolidation area, that means it broke through a strong zone. So when price broke above this area at 6 a.m., I saw this as an opportunity that, okay, we've broken up, we've created a high. Also we had this Brexit move that moved up and price obviously filled the wick, and then we had this candle forming bearish. Now, when we had this candle forming bearish, this candle did not indicate sells because it was closing above this zone, because now the only idea was that, okay, if price is going to move up, there's a very, very high probability price can continue up towards 137,100. And that was basically on the live stream, which you can watch for the 14th, the 14th October. So once this candle closed bearish and the next 30-minute candle was starting to break above the high of the previous 30-minute candle, right? So if you look at the price right here, you can see that the entry was taken at 136,660 as we broke the high, 136,660, right? So this was a long position taken at 136,650. Stop loss was kept below the current 30-minute candle, which was breaking the high. So once it broke the high, we're like, okay, you know what? Now there's a very high probability that price may continue moving bullish. So I added another position at 136,690, having the same stop loss on the retracement of the next candle, right? And then basically, price moved up to 791. This candle here moved up to 791, took profits. Next one also went up to 681, took profits, and that was it. Basically got like 10, 12 pip trades. I actually had I closed 7 lots on this 8 lot trade, and then I put stops at break even. Once stops went to break even, I was like, okay, you know what? This is perfect. If it continues running, we're going to make a bunch of money. It's going to be a pretty good day. But price came down, stopped it out, and that was the day basically, right? That was the day. Now let's take a look on the 15-minute time frame here, right? So if we're looking at the 15-minute time frame, this is how the 15-minute time frame was set up. So basically this candle closed with no wick at the bottom, wick at the top. Now the next 30-minute, next 15-minute candle closed like a doji candle, like a write-off candle. So now we were counting on the 30-minute candle to continue moving bullish, and we had the move up on the 15-minute, took profits, and that was the trade. Basically this trade lasted for about, I'd say, like 10 minutes, 12 minutes. It was pretty nice. Pretty good trade. Was really confident. Here's the thing about confidence and risk, right? Once you are really confident in a setup, you can afford to put on risk. So that's what I did over here. We were breaking out, we were breaking the high, there was a high probability for price to continue up, and it all came down to, am I willing to put risk on something that I've seen happen over and over again? And ultimately, like, you know what? We won the trade over here, made some nice money over here, and on the same day, took a sell on gold. This sell was taken at 1906.52, and let's talk about this sell right now. All right, so before we talk about the sell on gold, I want to talk about the weekly on gold and what led for me to take a sell on gold, which made me like $2,800, man, on a 5 lot. This was like a good, I'd say like a 40, 50 pip move. So basically what happened was I was looking at the weekly, right? So if we look on the weekly, we see that there was a support formed on the weekly right over here. There was support being formed on the weekly. This weekly candle was, it looks like it was trying to retest this 1930 area to continue moving down. So my bias was now sells, right? So let's take a look on the daily here. Looking at the daily, this daily candle was forming right over here. Now this daily candle was forming bullish, but overall weekly was showing a bearish sentiment. So I'm like, okay, like, you know what, daily candle is forming bullish, maybe it's going to continue moving up. So let's take a look on the smaller time frames and let's see what more information we can find. So I went to the 4-hour time frame. Looking on the 4-hour, what I saw was right over here. So this is around 9 a.m. Eastern, before NYC open. I saw this 4-hour candle kind of like tapping into 1912, 1910. You can see it tapped in here again on Friday. Yeah, on Friday, and it rejected it. So basically, this was a rejection previously on the 12th October around Asian session. And then price was coming in here to retest this area to continue down. Now, as it came up, you can see my entry was at 1906.52. So I jumped down to the 1 hour time frame. Looking down at the 1 hour, what I saw was that, okay, this 1 hour candle was rejecting, right? There was a bearish candle coming down. Now, obviously, I couldn't take a sell at this point, because if I took a sell, my stop would have been pretty big, right? 60, 50 pip stop loss. So went down to the 30-minute time frame. And what I saw on the 30-minute time frame was that, okay, candle was moving up. This candle had no wick at the bottom. Now, usually, I don't trade these situations, but slowly what's going on is I'm moving into the volume which comes in after London close. I've been watching that time for about 3 years now, and gold has a lot of volume during that time. So I'm slowly moving into that time, slowly like expanding my horizons, right? So when this candle closed with no wick at the bottom, it closed bullish. Right now, a bullish candle having no wick at the bottom means that there was no bearish momentum for price to go down, right? So if the next candle was to break the low over here, there would have been a very, very high probability for the candle to continue down. And if it was breaking down, I think this would have been the area where price would have came down to like 1900. So this was the whole idea, that once we started breaking down, I actively started looking at it. Once we came down to 1906.50, I executed a sell. The sell was executed. The stop loss was kept around 30 pips, 35 pips, because I wasn't really expecting price to retrace. So I'm willing to put down $1,500 on the line to see if we can continue down. So now, there was obviously the only confirmation was that we were breaking the low of the previous candle. That was the only confirmation, was putting down 1,500 on the line to see that if we do continue moving down, right? Because what we know about gold and GBJPY is that both these pairs, they have a lot of volume. They just move, right? It's very rare that they will do retests. So that was the whole idea behind this trade. So I took an entry at 1906.50. You can see right here, 1906.52, and closed the trade at around 1979. So somewhere over here closed the trade. So once this 30-minute candle broke the low of the previous 30-minute candle, brought my stops above the previous 30-minute candle, and we continued down to 1979, closed the trade, called it a day. Really, really good trade. Made me about $2,800. Gold was absolutely amazing at this point. So let's take a look at. Okay, so this is GP CAD. What we're gonna do is we're gonna look at the last trade. Actually, the second last trade. This was the second last trade on GPJPY. This was taken on Thursday, right? So we had two trade ideas taken on Wednesday. Wednesday is a high volume day. There's obviously high volume on Wednesday. Then Thursday, taking a sell on GPJPY. This was taken first thing in the morning on GJ at 136.479. So let's bring that up here. Now notice how for most of my trades, I'm not looking at the 4 hour, I'm not looking at the daily, I'm not doing my high, obviously I'm keeping some higher time frame to lower time frame analysis in mind, but predominantly it's just the 15-minute and the 30-minute charts, because I believe that if I'm looking at the inter-session trades, I have to focus on the 30-minute, I have to focus on the 15-minute, I have to look at the ranges, how many ranges there are, because obviously everyone wants to get 100 pips, 200 pips, but it's not going to happen every day. What can happen every day is that you can secure 10 pips, 15 pips, 20 pips, call it a day, come back the next day. The proof is right here, right? So let's take a look at this sell over here. So this was taken around 6 a.m. Basically what was happening was when I woke up, I was looking at, okay, we made a low at 136.300, right? We made a low at 136.300. Price was coming up, and this 15-minute candle had broken the low of the previous 15-minute candle, and it was about to close. So when this candle was closing bearish, I was like, okay, if price is really coming down, right? If price is really coming down bearish, it made a low right over here. We're having a retracement, and this candle is closing bearish. So when this 15-minute candle is closing bearish, what's the probability that the next candle will continue down to retest the low, right? What's the probability on that? I think it's a very high probability. And if you look on the 30-minute time frame, what you will identify is that This 30-minute candle was just one candle that continued down. Now someone can say, okay, could we have taken a sell once we broke the low on the 30-minute? You could have, but then the range would have been a little smaller, right? So let's go back to the 15-minute. Where is it? It's right here. Okay, perfect. So let's take a look at the 15-minute right over here, right? So once this candle closed bearish, took an entry, and this entry was taken at 136.479. 136.479. Somewhere right over here, 136.479. Entry was taken here. Stop loss was kept above the previous 15-minute candle, which was around, like 14, 13, 14 pips. And TP was kept somewhere around, 136.220. So if you look at my exit here, my exit was 136.373. 136.373, somewhere right over here. I exited the position, got my 10 pips. And at that time, I was like, hey, you know what? I'm going to secure positions. We're good to go. And price continued down forward. And then if I would have had a stop loss at break even, man, price would have gone even more further, would have made bigger gains over here, right? But I think the reason why I closed at this point was because I was already up for the week. I was up a lot for the week. So I was like, okay, you know what? I'll take what I can get, follow the plan, 10 pips, no runner, call it a day. That was that, So now you can see, took a loss on Monday, Tuesday loss, Wednesday one trade, two entries on one trade. So 1, 2, 3 trades, then 4 trades took gold, 5 trades. This is GJ, and now the 6th trade was taken on Friday, which is when we had Jeevan on as a guest. So he was talking about, we were actually watching the charts. So let me bring this up right over here. So we were actually watching the charts, and what was happening was that right around here, let's go to the 30-minute time frame, and a lot of people got actually demolished here. So what was basically going on was that we had this resistance at this point, right? So you can see that there was a rejection right over here, there was a rejection right over here, there was a and this candle was coming up, right? When this candle was coming up, I know a lot of people they thought that, okay, you know what, this is a great idea to take a buy. And when we look to the left hand side, what we see is, I'm just trying to get my drawing tools over here. I can't seem to get them. Anyway, it's okay. So this is an area here. This was a rejection area right over here. So let's do this. All right. Yeah, let's do this here. So this was rejection 1, rejection 2, rejection 3. So whenever price is coming up into a rejection area, we don't know whether candle will continue moving or the candle is going to retrace, because when this candle is looking left to its buddies over here, it sees that my buddies rejected here before. So at this point, me personally, I was waiting for a candle to close bullish outside of this range so I can take a buy on the next candle. So while we were waiting, price started to break down, and then we had this big breakdown, right? So now let's talk about this breakdown. So price broke down on a 30-minute time frame. So first of all, when it started to come down, it broke below this 30-minute support here as well. So let's mark down that support. It broke below this 30-minute support, which was at 136. So it broke below the 136 support, came down towards the next support at 135,640. And you can see that this candle that came down, it did not break and close below 136,600. It basically closed up 135, sorry. It basically closed above 135, right? So it's on smaller time frames, it kind of created a low over here. So now basically when we go down to the 5-minute time frame, let's go down to the smaller time frames at this point here. So basically what happened was, let me just try to look for it. All right, so 5-minute was pretty volatile. So now Jeevan was talking about how price broke down, and there's a probability sorry. So there's a probability that that price can do a retest of 136, because if price can do a retest of 136, there's an opportunity for price to continue back down to retest this low. So if you look at my entry over here, this entry was taken at 136,060. 136,060. The stop loss was kept at around 136,100. So this was around almost a 8 to 10 pip stop loss. I was willing to risk $800. I was willing to risk almost $1,000, right? So you can see now I was up for the week. This was a trade called on Friday by someone who trades fundamentals, right? And it was just an idea thrown out that price may come up to retest 136 and continue down. So I was like, okay, you know what? Makes sense. If I'm a betting man, I'm willing to bet 1 day's worth of profits on this trade to see if I can get a bigger trade. And if we measure this range from 136 all the way down here, this was a 40 pip range. 40, almost like this wick, like 62 pip range. So this is a pretty good range. So risk reward was 1 to 4, 1 to 5. So took an entry here at 136. Stop loss was somewhere at 136, 100, 8 pip stop loss. Even if I lost $700, $800, it wouldn't have been a big deal. I would have said, hey, like, you know what, don't trade Fridays, blah, blah, blah. But, the idea looked good. Price came down, closed the trade around 135, 614. As we came down towards this support here, closed the trade, it eventually fell more. So that trade put me up to $4,200 for Friday. So all in all, came up to like $8,926.53. At the end of the day, man, it's all discipline. You gotta stay disciplined. You gotta take 1 to 2 trades a day. If you take a loss, call it a day. Like usually what happens is when you take a win, you're excited to call it a day. You're like, hey, like, you know what? I took a win. I'm gonna call it a day. But when you're taking a loss, I think you should do the same thing. I mean, just call it a day. Like do what winners do. If you take a loss, call it a day. Go study that loss. See how could you have taken a winning trade. If you missed the trade, how could you have been in that same trade? Just focus on those and things are going to go really, really well. I hope everyone enjoyed this. We're going to continue on doing these recaps. I think they helped a lot of people at the same time too. And don't forget, we'll see you guys Monday morning, early morning. Lost my whole script. So Monday morning, 6:30 a.m. Eastern for the New York sessions. Adios and have a great weekend.